Hey there, everyone! Welcome back to the channel. If you're new here, I'm your name, and today we're diving into a topic that can seem a bit confusing at first but is super important for your financial planning: life insurance. Specifically, we're going to break down the differences between term life insurance and whole life insurance. So, grab a cup of coffee and let's get started. Now, before we jump into the details, let me ask you a quick question. Have you ever thought about what would happen to your loved ones if something unexpected were to happen to you? This is where life insurance comes in. But with so many options available, how do you know which type is right for you, term life or whole life? Let's break it down. Let's start with term life insurance. This type of policy provides coverage for a specific period, usually ranging from 10 to 30 years. If you pass away during that term, your beneficiaries receive a death benefit. However, if you outlive the term, the policy expires and there's no payout. For example, imagine you take out a 20-year term life policy for $500,000 when you're 30. If you unfortunately pass away at 40, your family receives that $500,000. But if you reach 50, the policy ends and you don't get any money back. Generally, term life insurance tends to be much cheaper than whole life insurance, making it an attractive option for many young families or individuals looking to cover specific financial responsibilities, like a mortgage or children's education. On the other hand, we have whole life insurance. This is a type of permanent insurance, meaning it lasts your entire lifetime as long as you keep up with the premiums. Whole life insurance not only provides a death benefit but also has a cash value component that grows over time. This cash value can be borrowed against or used to pay premiums later on. For instance, if you purchase a whole life policy for the same $500,000 at age 30, you not only get that death benefit but also start building cash value. This cash value accumulates at a guaranteed rate, and you can access it for emergencies, investments, or even retirement. However, whole life policies tend to be significantly more expensive than term life policies. Let's consider some scenarios to make this clearer. Say you're 35, married, and have 2 kids. You want to ensure they're financially secure if something happens to you. A term life policy might be ideal here. You can get a robust coverage amount for a lower premium, providing peace of mind while you're raising your children. Now, let's say you're a bit older, maybe in your late 40s or early 50s, and you're thinking about retirement. A whole life policy could be a good fit because it not only covers your family in the event of your death but also builds cash value that you can tap into later. This could act as a financial safety net during retirement or even help fund other investments. It's essential to consider your financial situation and goals when choosing between these two types of life insurance. Term life might be more budget-friendly initially, allowing you to allocate more funds toward investments or savings. However, whole life insurance can be seen as a long-term investment. The cash value can grow over time, and the death benefit can be used as a wealth-building tool, especially if you're thinking about estate planning or leaving a legacy for your family. According to a recent survey by the Insurance Information Institute, about 57% of US adults have some form of life insurance, yet many aren't aware of the differences between these two types. This highlights the importance of being informed before making a decision. So, to wrap things up, term life insurance is a straightforward, affordable option for temporary coverage, while whole life insurance offers lifelong protection with a cash value component. Ultimately, the choice depends on your financial goals, your family's needs, and your budget. If you're still unsure which option is best for you, I highly recommend talking to a financial advisor or insurance agent who can help you assess your individual situation. And remember, it's never too early or too late to secure your family's financial future. If you found this video helpful, please give it a thumbs up and share it with friends or family who might benefit from this information. Don't forget to subscribe and hit that notification bell so you never miss out on our latest educational content. Thanks for watching, and I'll see you in the next video.